What's up, guys? Welcome back. Today we're actually going to look at the numbers associated with the dividend portfolio, show you who's really carrying the load as far as returns and dividends, and like who's my top dog. Last week I released a video. I went through all the stocks that I owned. Everyone loved the video, guys. Thanks so much for the support. Almost 10,000 views already. But I did get a lot of questions about like who's actually performing. Like if I had to narrow it down, what are the top stocks in my portfolio? Who's kind of at the bottom that I could maybe get rid of? So I just wanted to dive into the portfolio today and show you the actual numbers, not just the stocks, as well as flash that spreadsheet that people always ask me about, show you a couple different ways that I make that spreadsheet and stuff. So answer a bunch of different questions today and also let you know what I'm buying according to what stocks are doing well right here down in the portfolio. All right, so here is the Fin Incorporated dividend spreadsheet. And guys, people ask me all the time, hey Brad, can you send me this template? It's a Google Doc. I think it's really important for people to build their own spreadsheets. Like, of course, I could just give you the template, but I think it's just easier if you build it to your liking. I add categories and take categories away like so often that for me to give you a spreadsheet, it would change literally monthly. But I will show you like how I make categories and how I pull data, and maybe I'll even throw them in the description so you can just copy and paste them into your own spreadsheet yourself. After last video, we were talking about Starbucks and Bud and dumping one of them. I actually did dump Bud and put that money right into Realty Income, which is like the stock that I'm really trying to push to get to maybe 50 shares by the end of the year. And then hopefully have that be my next stock that I get to 100 shares with that I could do the wheel strategy with. But throughout this entire spreadsheet here, I have the amount of shares that I have, its percentage of the portfolio, which doesn't really mean that much to me. I mean, later on when I get a lot of my stocks up to about 100 shares each, which is kind of like my initial first benchmark goal, then I'll make sure. But right now I understand there's going to be some different percentages here and there. I have the average cost in column F, and then in column G, I have the current price. What that allows me to do is to see, where my cost bases are. I like the 365-day graph, like the 52-week graph. It just lets me know like what's going on over the last year, and also allows us to see some big dips. Like we know what happened in March and we see a lot of them, but you can see there's a lot of stocks that have already recovered past that and are doing just fine. The cost basis, that's how much money that I have that's put into each particular stock, and then the market value, where they're at. That allows me to find their gains. Now I had just gain and loss, but the numbers really don't make that much sense unless you have something to compare them to. So I compare them to how much that I actually have invested in that, which gives me a profit loss percentage, and I'll sort everything by that in a second. P ratio is just something I'm looking at as far as value, and I look at the value according to two different metrics: the difference in the current price to what my basis is, and also what the PE ratio is according to like the S&P 500, which right now is right around 20. Obviously, different sectors have different PEs. It's just something for my eye to catch on and see if I see anything that's really stands out at me. The yearly payout, these get updated every couple days, every week. For example, I know right now Wells Fargo, we know they cut their dividends. So this hasn't been updated because they haven't had an ex-dividend date. So this column doesn't update according to like real life announcements. It's actually after it happens, it'll update. So that dividend percentage yield is going to be here. And then this is the estimated income that the portfolio is going to bring in just dividends. As you guys know, I'm a huge fan of the wheel strategy. I sell covered calls and cash covered puts weekly. Right now, it's Monday. It's before the markets are open. I'm getting ready to do that same thing again. I was going to wait and show you, but with two kids under 2, this is the time I had to film early in the morning. So this is the time that I'm getting it done. Looking at about $500 right now in dividend for the income. And like I said, to give you some comparison, guys, I'm doing $500 a month in options premiums, just covered calls, just cash secure puts. So what I'm making in a year in dividends is the amount that I'm making with the wheel strategy monthly. So if you don't know the wheel strategy is, at least take a look, guys. Just because you hate football does not mean you hate sports. All right, you don't have to hate all options. There are some good ones out there, even for beginners. I'll leave the wheel strategy playlist at the end of the video. You can check that out and see how I'm making $500 a month in premiums, passive, nothing, no problem whatsoever. Quickly before I sort, guys, I want to show you what information I put in here. Like I said, I'll leave the copy and paste so you can put them into your own spreadsheet. Shares, I put that in automatically. What we're doing is we're looking up here in this FX box. The percentage, all I do is I take the percentage that I have in my total portfolio, okay, the market value, and I divide it by. Now, what this little dollar sign means is that allows me to sort the rest of this column and keep just one box. So it's always going to divide by just L20. When you grab and pull, it grabs and pulls always, unless you put dollar signs in between the column and the row, which means I'm going to take L2 and divide it by just this one. So when I pull it down to here, now I'm going to do L3 by just this one. It doesn't pull down a column. That's a little like nerdy spreadsheet stuff, but people always ask me what does a dollar sign mean in there. Average cost, I put that in manually. The current price I pull from Google Finance. Guys, all you have to do is inside your cell, and you could probably do this on Excel as well. Don't quote me on that, but I just press equals, which says we're going to do something in that cell, Google Finance, parentheses. You need the ticker symbol. So not the name of the stock. It needs to be the official ticker symbol. So I have it pulled from there. And then in quotes, I put price. So it's going to go to Google Finance. It's going to look for the price of this ticker, and it's going to put it right into my spreadsheet automatically. And then I just pull it down, A3. It's just going to look for the ticker symbol and the price. While I'm doing that, people always ask me about the image. Guys, so put an image in here. All you do is click on the cell, insert image, image into cell, Google image, and I would just type Wells Fargo logo. Click which one you want. So let's say I wanted to change it. Maybe I want to put this one in. I just click it, insert, and it'll change that for me, and it'll put a new image in there. It's simple as that, guys. You can do this, I promise. So the current price came from Google Finance. The difference in price, all I do is subtract these two, okay? And then I do it by a percentage, not a big deal. The percent change, so same exact as the price, just in this one, I go to the ticker symbol and I ask for change. So it's gonna give me the 24-hour change from yesterday, and it updates about every 20 minutes. It's pretty good. I think down here it says 20 minutes. It's usually a little quicker than that. This is a long one. If we look at this FX box, I'll put this entire SPARKLINE, I'll just put it in the description. You could copy and paste it, and it should work. But some things that you have to notice inside here that you're going to have to input yourself. There's a couple of boxes that are very, very important. So like A2, these all mean, okay, let's just do this for Wells Fargo. Everything else you could pretty much copy and paste directly, but you're going to need to input your own A2. If you want it, say, half the year, you could put in the amount of days here. So you can go back last 365. You can go back last week and make this a last week chart. But you see, as I go down, now it's going to A3, 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 A4, because it's going to go in that column. But I'll copy and paste this. I'll put it in. You could try it. Go for it. Just try. I promise. Just try. You could do it. This cost basis, this is not pulled from this sheet. It's pulled from another dividend sheet that I have right here where I track everything in a little bit more detail as far as what dividends I'm making and what premiums I'm making, because for me, my actual cost basis isn't just what I've invested. It's what I've invested minus the amount of dividends, because every time I receive a dividend, it lowers my basis. And also, I use premiums to lower my basis as well. So this just gives me a more accurate count when looking at this spreadsheet to be able to do that. The market value, all I'm doing is I'm taking D2, so I'm looking at the amount of shares, by G2, the current price of that. This is how much it's worth in the market. Here's what I've invested. And then I just subtract the two columns and I get a percent loss. This is pulled from Google Finance as well. It's not price, it's not change, it's just PE in this box. The yearly payout, I will copy and paste this one because it looks a little intimidating as well. Once again, you have to put in the A2 or whatever column your ticker is in. Okay, this is going to come from a different spreadsheet. The dividend yield, I just divide P2 by G2. And then the income, once again, just some more math, and then I have my columns all set up. So let's sort these and look at just the returns and see who's killing it, make it a little bit easier. Sort the range. I'm going to descend, and I'm going to sort column N so we can just look at just the gains and losses. Okay, so now this is sorted. We see that my biggest return is Verizon. Now, guys, this is in an overall portfolio return of 8.45 for just dividends since May 1st when I started. I know what you're thinking, like, what? That's ridiculous. There's no way. There's got to be some wrong math. Remember, guys, I think of dividends and I also factor in premiums for my basis, okay? It's harder for me to check my email than it is for me to do a cover call. People want to argue with me that it's not passive, it doesn't really lower your basis. it lowers my basis for me. So the reason why this is so high is because I have sold options with it. I've got $29. So where it says here, the amount invested, 114. Well, when I sold an option for that, I got $29 back. So my real basis is really 83.87. It's not 114. So when I come back up here, that allows me to get a return of almost 40%, right? 40%, it's insane. Like I said, considering that this whole chart is going to drip me $463, but I'm making $500 in just premiums alone. But I don't do options with every single stock, right? So there is that. Here's the ones I do them with: Wells Fargo, AT&T, Aflac, Cody in my other portfolio. That's a long story. And then Verizon. Okay, so that's why those ones are affected. The other ones in my portfolio are just doing really, really good. Caterpillar for me, up 19% right now. And that's awesome. That's without options. That's just dividends and capital growth. Right now, Waste Management up 15%. Home Depot, 15%. Kimberly-Clark, 13%. So there's a couple good gainers. Now, I think a lot of that has to do with the fact that I started building this portfolio after that huge dip in March. If this was something that I've been building for the whole year, I'd probably be a little bit closer to zero. So I'm not here to say that I'm like the magical oracle of dividend portfolios. I understand that there is definitely some inflation due to the fact of when I got in, but I'm telling you, the premiums that's really what's bumped this up to 9% almost. So you can see, guys, if the average market return is 7% over time, about half of my portfolio is returning over that with growth, dividends, and premiums. Now, if we go down to the bottom, we see some of my talks, guys. Wells Fargo, if you guys have been following the channel for a little bit, you know what happened with Wells Fargo. I pretty much started my options chain with them like right when they went up. They spiked. I didn't worry about dollar cost averaging. I was like, I'm going to sell options. It's not going to go that crazy. It's not too volatile. And then boom, it dropped like a ton. So it's dropped a ton for me, and I know that I have to battle back. And that's what I'm doing, Wells Fargo. But that's the only one that's really in the red for me. It is. But the thing that really it makes me upset is that not only are my dogs down here not really returning compared to the portfolio. Pepsi 2%, Johnson Johnson 2%, Starbucks 1.9%, but they're also my lower dividends. And this is when I talk about selling, and it came up a lot in the last video. Like, I don't know how long I'm going to be able to hold on to Starbucks for. I don't know. I'm going to try and let the market rebound. But at the end of Q3, there's a couple stocks here that I want to make sure that they should be in my dividend portfolio. Like, I'm okay with Pepsi. I think they're like right on the fence for me. But there's a pretty good chance that Johnson Johnson, if things don't start to turn around for them after we get out of these current market conditions, they might be on the chopping block. At 2.73, they're still a dividend, but it's just one of these things. This is how I use this chart to look at certain things that I'm going to evaluate at the end of each quarter. And it's also why when we look up here at these lower dividend yields, that I'm okay with that, because look what they grow as far as capital gains and other things like that. So this is how you use a spreadsheet just to evaluate your own portfolio and take a look at it. As I said in the last video, this will probably get closer to 15 by the end of the quarter, definitely by the end of the year, mostly because I want to be able to know these companies in and out. In the beginning, I got very caught up in buy, build a portfolio, but now I'm realizing I want this to be manageable. I want to be able to follow up on earnings, things like that. And I think right now with the amount of time I have, 15 is going to be right where I'm at. It's like my sweet spot. It's not a number I came up with or a number that I think everyone should have. It's just a sweet spot for me. As far as the options for this week, I don't know, what is it? It's like the 10th. I have a 2-week contract open on Wells Fargo, so there won't be one on Wells Fargo this week. AT&T, I will be selling a covered call at $30.50 for that for 1 week. Aflac got assigned last week by 2 cents. I showed that on my Instagram. So now that it got assigned, I will be selling a cash covered put, the same exact strike at $36.50. And if I do not get that back, I will be buying 100 shares next Monday, because Aflac has an ex-dividend date coming up, and that's super important to understand when you're doing cover calls. Cody's just something I'm messing around with. It's in my free portfolio from all the shares that you guys got from signing up, and then I got one too. And then that's pretty much going to be it this week. I'll look at the premiums for some other ones, but I think that's really where I'm going to be at. That will open up Wells Fargo, Aflac, AT&T, Cody, and then maybe I'll sell a put with Verizon to see if I can get some money back on that as well. I am always looking for awesome dividend stocks to research and add to the portfolio. So guys, tell me what stocks are killing it for you. I want to know who should I be looking at that I'm missing that's returning you a lot. And guys, please stay away from these low grade companies. If it has a dividend yield of over 7%, don't even recommend it to me. Like I said, I want long-term holds. I want dividend aristocrats. I want things that are going to build my portfolio over the long term, not these like hypey, new age dividends that are returning. That's not for me, guys. I'm too old for that. Up here, I'll leave a playlist of the wheel strategy if you want to look more into premiums. And down here, I'll give you some more awesome content. The days are growing shorter. Summer's coming to an end, guys. I hope you have yourself an amazing week. And until I see you on the next one, stay positive, work really, really hard. Always, please be kind to other people. I hope you have yourself an amazing day and an even better tomorrow.